All right, thank you, Dr. Kawa. So next, Richie, even though we talked about real investment and how difficult it is to be passive in real investment, but it's still possible. So you want to talk about how to do passive investment by investing in real assets.
Okay, so I want to make this case, and for all of us on the call, I think investment is not for a selected few people. We all can be investors, and as Daniel said, our money should be able to work for us. Questions that people usually ask is, our salaries are not even enough. How much are we able to save that we can do some of such investments? But then it takes a culture of discipline to put some monies there every now and then. So you could decide that every month or every week, out of how much you spend, there are certain costs you can cut off. And Daniel was talking about wants and needs and all of that. Anytime you buy lunch, you buy Coca-Cola on top, or you buy malt, which is about 10 cedis. The minimum you can invest in T-bills is 100 cedis. Assuming you deny yourself adding malt to your lunch for 10 days, you can start with a T-bill of 100 cedis. The savings culture, we are not very good at it because we never think that our monies are enough, but it takes that discipline to do it bit by bit. When it accumulates, you put it into something more interesting, like an investment vehicle. In terms of real investments, and we talked about some such as the buying properties, which could be land or buildings, or buying commodities and all of that. Some of them, if you're a day's work, you do the 9 to 5, you can't be a farmer. Neither can you be a full-time real estate agent. But you can invest in some of these properties and they'll be working for you. One is, if you buy land and you wall it, like Bismarck said, it will appreciate in value. That is good. But you could also buy and sell. There are in Accra now, Mirage, for instance, before they finish putting it up, they are selling units in there. If you have enough resources and you can buy a room in Mirage, you could put it out either for Airbnb, for rental, or even for resale. And that could bring money. So you may not do much than getting somebody who perhaps cleans the room. And there are apps now that you can connect, and then you have your Airbnb. People come and reside there. When they drop from the airport, they can spend 2 weeks there, and you make your money. You don't even have to go to the facility. Those are some examples of real investment that you could do passively. Another bit that you could do is real estate itself. So recently, there are adverts that you see where real estate companies want you to drop your money. They can buy lands, and you have a parcel of land, but you only have the certificate. You may not even see the land. There are risks involved that I'll talk about it. So your land is being developed or is being put on resale, and the monies that come on it, you are able to cash in on that. Another commodity, or another angle that you could put it, is investing in commodities. An example is gold. You could buy gold in a passive form, and it will be traded, and then you get your monies on top. That is the model that perhaps we had for men's gold, but then it wasn't on right footing and right grounding that it found its way in trouble. But of course, Bank of Ghana recently launched their gold coins that if you buy, I think they've released the prices. There is a 1 carat, half, and quarter, if I remember rightly, and it starts from 11,000 to about 44,000. So you could buy, and here, reading from, I've not experienced it, but reading from what they have, you go to a commercial bank, you want to buy a quarter of that gold, you pay your 11,000. You are given the certificate, and as the value of gold appreciates on the market, you see appreciation in your investment. You could also buy the full 1 carat, which is also about 44,000. That is also another side that you could have. The risk involved is quite low, given that it's coming from Bank of Ghana. But if you're dealing with individuals, I think some factors you may need to very much be aware of. One is your risk tolerance. Bismarck has emphasized that how much risk are you able to tolerate? Some people got bent in men's gold, but they are fine, and they are doing even worse ones. So you of course you hear an investment that is giving about 50% returns, and you know it is too good to be true. But some people invest because for them it is very much I'm in or out, taste drink or taste not, something like that. So they have the heart for such risky engagement. And again, another factor you may also look at is liquidity. So if I buy a Mirage accommodation and I need my money back, how easy am I able to do? So if you are buying a a land or a property, it's not very liquid, but given the location, some properties can be easily disposed of. So if I buy a land, perhaps in the developing space, you know that within a short period when it moves up, there are people who want to develop their properties over there, so you could resell it and all of that. Another side you may also look at, because it's real properties, there are taxes that comes with operating some real properties. So for instance, if I buy my land and I'm reselling it, the value that I get on top, there is something that a proportion that GRA has to take. It's called a capital gains tax. Unlike financial assets that you could transfer without any such taxes, but for capital or real assets, when I'm transferring ownership and there is an increase in value, there is a capital gains tax. So you need to look at the capital component, whether, of course, if you are not in the mainstream, it may not be identified, but if you want to be a law-abiding citizen like some of us, maybe you need to show up and all of that. Again, for real assets, for most real assets, you need to maintain them over the period so that its value is maintained. And that comes at a cost. So if I'm buying a land, for instance, in Kaswa, you need to, beyond all the paperwork, you may need to get a security guard who reside on the land, which you need to pay every now and then before land guards come to take over. If you're buying it somewhere else, maybe you may not need all of those costs. But instead of going through the trouble, somebody may want to maybe buy a completed house and then operate it and resell. So you look at the possible cost and fees that come with maintaining a real asset. Of course, if you buy a full house, that one too would come with its own maintenance and all of that. A key thing that you may also look at is the regulation that comes with some of such real assets. I talked about the gold factor, and here we have men's gold, which was not properly regulated and it went down. So we make sure that there are no scams or scammers behind it, and the market is quite regulated, and it gives you a peace of mind that you can rest. Even on buying real estate for rentals, I remember in Ghana some 5-6 years ago, there was also another scam that came in the market where a pastor, I don't remember the name, also took money that he's investing in real estate for the church members and other external people. That went down. So you need to be very cautious, knowing the markets that you are dealing with and ensuring that at least it is well regulated. You need to be sure that you are involved when it comes to real assets. So we've talked about maybe if I'm an entrepreneur, and in Ghana, the integrity levels of people, you can't be an absentee entrepreneur in Ghana. The word is passive, but the clarity is absentee. So if I'm a farmer, I won't sit home and expect that my laborers will harvest. And there is a student that I engage with. He supplies mangoes to Blue Skies, and during the harvesting period, he won't even come to class. He's at the farm when they cut it and put it in the trucks and they are bringing it. He transports he's with them. And if there are 3 tracks, he can sometimes overtake 3 of them, come in front, sometimes delay and be in the middle, go back. You need to be monitoring people here and there. And I've seen examples of people shop where they are raided by the people that they think they were providing employment for. So you can't be an absentee entrepreneur in Ghana. And again, if it's too good to be true, it probably is too good to be true. So if you see any investment angle that you think that what at all are these people investing my money in that they are giving me 60%, you should question it. And reasonably in Ghana now, I don't see any assets that investors are putting in money that they are getting 60% for them to even give me some 60% as my interest. So I think the caveat we need to serve is we need money, of course, but we should also be a bit cautious to make sure that we are investing in the right instruments. Thank you very much.
Okay, thank you very much, Richie. So yeah, before we continue, if you have any question and you don't want to speak out your question, you can put it in the chat, and then we will take notice of it and address it after this. And then we also allow people to speak out their questions. So if you want to speak out your question, that is also allowed after the discussion. So yeah, one very like investment asset that has become very popular recently is cryptocurrencies, blockchains, NFTs, meme stocks, and then so we want to take some few minutes to address that and then have a couple of discussions on that. So Bismarck will take that for us.
Yeah, so can you hear me?
Yeah, we can hear you, but we can see you.
Okay, let me turn on my camera. Okay, so I think that the fad investments are now popular among the younger generations and even some of the much older folks. Last week, Bitcoin hit $100,000, and then there was a lot of jubilation on the market. So basically, with these kind of investments, which they call the FAD or FAD, it's more like a temporary run up of assets, and it's driven by market enthusiasm, and most of the time, it's not long term. It's not sustainable over the long term period. Take out even cryptos, even some of your stocks. There was a stock called the Game Stock, and you can go and look about that story. And there was this they called the .com bubble when internet was coming over. Most of the entities which were doing a lot of internet activities, for example, venture capitals that started and were mainly for were mainly for internet related activities, received a lot of funds, and there were a lot of investments, so their share prices shot up over a short period of time, and those share prices dropped off. But currently what we see in our market is not that, because we have all moved from that to the digital kind of investment, which we call the cryptos, as the name suggests. And so we cannot exhaust fully what crypto is, but what you have to notice that currently in Ghana, it is not regulated. And if you want even an analyst to give you some background information about it, sometimes it's quite difficult, because even in accounting, there is no accounting standard to regulate it as I speak to you now. It's not captured under IFRS 9. And so more like we look at the nature of this particular asset that you are holding, and we try to do some form of valuation for it. And until recently, even some audit firms shied away from auditing entities with such investment, but now it's becoming popular and a lot of people are venturing into it. If you don't really know what it just entails, it's just a digital asset that has been generated by using data mining. So we mine data, we come up with a finite number of coin, and we start to sell it. If you are wondering what happens and what causes the demand and the supply, what causes the price to increase, it's about the demand and supply. Like I'm saying, it's a finite number of coins for the cryptos or assets. So as demand goes up, because the numbers are finite, then what you would see is that the prices in general also begin to go up. If you take Bitcoin in particular, the last one is projected to be mined in 2140. So after 2140, there will no longer be any Bitcoin. So let me just explain that Bitcoin is not crypto. It's an example of a cryptocurrency. Not all cryptocurrencies are Bitcoin. There are different types of cryptocurrencies that we have. But what I want to say is that the prices as we see on the market is driven by demand and supply. And because it's a finite number, if the numbers that are on the market are low and the demand is high, it drives the prices to go up. And because of that, the values that you'll be holding would also go up. Is this something that I would encourage somebody to do? It's something that I would say if you understand and you know what to do and you really know the risks it comes with, you can go into it. What we've seen over the last 2 years or 3 years is individuals posing as having to have an understanding of it. Setting up a website in the first 1 or 2 or 3 months, they will tell you to deposit some money on their website. They would invest in these particular securities for you, and then they will pay you a return. They will do that for a month or two, and the next time that you go on, this website is crashed. It doesn't even run. It's not opening. And so in that circumstances, then nobody has to tell you, but it means that you've lost your investment in that regard. And so if you understand what you are doing, fair enough, you have to go into it. The other ones that people are also using currently would be things around trading of foreign exchange, foreign currencies. Also, with that, there could be a bubble on that, in that it will rise over a short period of time and it will drop. That is also becoming popular, and there are a lot of people online who are saying that they are currency traders. Some might be legit, some might not be, but just know that it's because of the nature and because it's temporal. It comes with a lot of risks. So you can either you are going in for all, or you are going in for a measured amount of risks. But this whole thing comes about because people didn't want to deal with intermediaries like banks. So what cryptocurrencies platforms allow you to do is that it allows a peer-to-peer system that enables you to send money and receive payments, not money necessarily, but send and receive payment. So currently, for example, if I want to send money to somebody, I have to go through my bank. My bank serves as a trusted source. So I go through my bank, I send the money to my bank to maybe Enoch or to Richie or whoever it is. So the bank is the intermediary. What cryptocurrency does is that it removes that particular stumbling block and allows you to do peer on peer to peer at each levels. And it's a blockchain, the same as NFTs. All these things are digital instruments that you cannot see, you cannot touch, and the value of it, the value is determined by the market. So you can't say you have a 10,000 dollar Bitcoin today and expect that tomorrow to be the same amount. No, what will happen is that the market forces will determine the value the next day. It can drop or it can increase. So you just have to be measured in what you want to invest in, or as much as possible, invest in what you know. And for me, that's the bottom line. Invest in what you know. If you don't understand it, don't invest in it. If you don't know what it is, if somebody says, "Give me your money, let me use it to buy this for you," and it will go up, and like Richie said, the rate is very high, and you are not sure about it, and it's a free money that you don't mind it's losing, you can let it go. But if something that is your bread and butter, then I would advise that you understand those kind of investment in general. And so, not to bore you or not to lengthen the conversation, in summary, that's what Bitcoin really is all about: a digital financial instrument that has been created to allow individuals on each end of the network to exchange funds directly without having to go through a trusted third party intermediary. And the prices that you see are determined by demand and then supply. So if you see that Elon Musk would mention a cryptocurrency name like Doge, and all of a sudden the price of Doge goes up because after he mentions it, everybody wants to hold those particular securities. Currently, you can use it to buy and sell in some even shops and some places, but not everybody understands or not everybody receive it. And please don't let nobody should deceive you that it cannot be traced. It's like a general ledger, so it keeps tracks of every transaction. So please, it's traceable. Most people think it's not traceable and that they are doing something secretive and nobody can find out. It definitely keeps records of whatever transaction or whatever transfer and payment that you are doing. So I know there's no money launderer on the call, but if you think that's a appropriate way to do it, just be on the lookout that if they want to find you, they can easily find you. Thank you.
All right, thank you, Bismarck. And yeah, just one note, more than 90% of cryptocurrencies that were created since this blockchain started have failed. So I know like we normally hear about the ones that are doing well, like the Bitcoins and the Ripples and the Ethereums, but there are millions and thousands of currencies that were created that have failed. So please be very, very careful when you are going to it. Talk to someone. And from my personal experience, no one really understands what is happening. That is why Bismarck said that even IFRS doesn't know how to account for it in the accounting system. So when someone comes to you and says, well, I'm an expert in crypto, be very, very careful about what the person says. But hey, you can study it yourself. And if you feel confident enough to go into it, just go into it. And ask and how much you want. So yeah, the final question, it's we've known about all these types of investments, but there's one very important topic in investment, which is diversification. And then we will let Dr. Cowell take that one for us, explain what diversification is and its importance in investment.
Thank you very much. As we spoke about passive investment, active investment, investment in real assets, and investment in financial assets, we put all together so that if you have or you are an egg seller and you went to the market to buy eggs, and the eggs that you bought, you've put all of them in one taxi. And on your way, there was an accident. What do you think will happen? The entire egg will burst. There will be breakage. And there you will lose all your investment in the egg. And so in investment, we say that you don't put all your eggs in one basket, because the little mistake that you make and you fall, everything comes to an end. And so there is the need for you to have some bit of savings. So I have here with me my coin bank. So you can see the coin bank that I have here. So this is a coin bank that I have. So myself and my family, everybody have one. It can be the Susu box. And today is day 350 of the year. So our challenge is that every year, every day, we put 1 Ghana cedis in the coin box. Every day, each person puts 1 Ghana cedis in it. So we generate some amount of money at the end of the year. If we could invest that money in treasury bills and we roll it over, where interest is earned on interest, which is the compound interest, we will have some money. So that is about the savings, the investment in that. You could also have some shares. You could also have some insurance policy. You could also have some real assets. You can have a farm, you can have a land, you can have animals that you are rearing and all those things. So that at the end of the day, if one of the investments fail, you would be in a position to recover some. We heard of the situation on the domestic debt exchange, where we have seen pensioners who have picketed at the finance ministry. These pensioners said that is all that they have. Their entire money. And so they went to put their money into bonds. And domestic debt exchange has come in. There was a haircut. They couldn't get the full amount they have invested. If they had diversified their investment, that is putting it into different instruments. There is a treasury bill, there is shares, there is a land, there is a farm, and they have some business that they are running. At the end of the day, they will not be so much bothered on the bonds. And so when we're talking about diversification, we are saying that you are trying to make sure that you don't put all your investment in one company and in one instrument. You don't put all your savings, even savings, with one bank. If the bank collapses, what happens? There are people who have their pension money, everything that they've worked for in their entire life. They were from Elmina. And so they said, Pakwesi Indum, the bank is the best for them. And so everything that they had, they've invested it in Group Indum Bank, Black Shield Company. Unfortunately, it went down. Their investments went down the drain. And so we are advising that when we talk about diversification, you are trying to make sure that you spread the investment. In doing so, you spread the risk that the investment will come with. Where if there is a trouble with one investment, you would be able to recover from the other. Thank you very much.
All right, thank you very much, Dr. Kawa. So that is about diversification. It's very, very important because the market is very risky. Even the things that you think are not risky can blow up and then you will not know what to do. So it's very important to have separate types of investments in different assets, different industries, so that you'll be protected when there's a market downfall. Okay, so that will be the end of the panel discussion, and we'll go on to questions and answers.